Good morning, everyone. All right, when we look at the markets this morning, I thought I'd show you a price pattern that I trade and you could use. And I've used it for many years. And one of the things that we battle is getting on board a moving train, so to speak. And we wait for retracements back up towards some resistance area when we want to short, and vice versa for longs. However, sometimes we don't get that retracement. And so what's happened here in the NQs, I'm using this as an example since it's set up here, but I'll show it to you in another time frame in oil, is that when you get a move like this, I'm using a 5-minute chart here, a momentum type of a move, it creates that void that I've talked about, meaning there's no resistance over here up above. So what we usually do is, we look what's beyond what's directly to the left, right? What's beyond directly to the left, and look for some swing low beyond that, and we call that minor resistance. Now, so when you get this type of retracement on the initial turn here, a lot of times, looking for a continuation to the downside, you're going to get whipsawed, meaning, if you get the turn, you get the initial turn on a shallow retracement, a lot of times it'll go a little higher and it'll make a higher high and then it'll roll over. So that is you could do that looking for the higher high, and then you wait for a red bar or a reversal for it to roll over, or it makes a double top. And that's the concept that I call creating resistance. When it goes up there, into the void, it starts to pivot. There's nothing to the left. However, it then retests the high, and now you have a new resistance area. Right? Sometimes we call that an M top. However, it's come down. It's got this void above here. There's no resistance. It pivots, and then it retests, and then you get the drop. Now, here you had the deep retracement back up, and this one is more of your classic type of reversal setup into the minor resistance area, whereas this move up, after the momentum moved down, there is no resistance. So you wait for the retest or a slightly higher high to short within the context of a downtrend. Now here we have a very extended NASDAQ to the upside, what we call a climactic sell setup, and we are short this from yesterday, and we had a little bit of a heartburn, if you will, when it came back up, but we're playing the odds here that it's going to turn, and so far it's looking good this morning. We don't know that it'll end this way, but the pattern is one in which it's up multiple days in a row. It's a fluid type of a move. Now, what do I mean by fluid type of a move? You get a bunch of green bars, meaning it closes above the open, near the high. It continues to do that. It opens near the prior bar's close, and it continues to do that and do that and do that, and it's getting extended away, from the moving average. But in reality, it's getting extended away from any resistance area. So what's going to stop it from coming down? Because now it's got the void below. Well, you got some overlapping candle bodies here. So there is a base. I know that there's a base there intraday around this 58.40 area. And we could take a look at that. I could show you here. 58.40 area, which is over here. And see, so there's another concept. I taught this to many traders and investors over the years. Overlapping bars in a higher time frame is going to be a base in a smaller time frame, and that's why we look at the overlapping bar area if you're a swing trader looking at the daily chart. So a lot of the concepts that I've taught over the years is about how to read price patterns in multiple time frames with just looking at one time frame. It's a very powerful concept, to be able to see what's happening in multiple time frames by looking at one. So here we have, intraday, the 30-minute chart. We've got this topping pattern, a new high failure, an upside shakeout. You can call it a head and shoulders top, whatever you want. It's made a new high, and then it's failed, come back in, deep retracement, and now it's breaking below these lows here, opening up the door to some movement to the downside here. And I do recognize that there's this little area right here around 5,900. It already tested it once, so maybe it goes through it. All right, so let's take a look at oil with the same concept. So I mentioned yesterday about oil, and I got a couple of questions about why I said it's making, lower highs here, where this had kind of pushed up a little bit above here. Well, when I talk about making lower highs, I'm looking at the highs that I call major resistance within a downtrend, and that is defined by a high prior to the lower low. So when this bounced up from this lower low, right, this was the major resistance area. These points here, they don't have enough bars to the left to really call it a pivot. It's what I would call a minor pivot. But when you're looking or doing your trend analysis and looking for those lower highs and lower lows, my preference is that it be a minimum of 3 lower high bars to the left and to the right. So, we have that here and here. So this is why I'm saying it is making a lower high here. Now, and similar to that 5-minute NASDAQ, all these concepts are, universal to all time frames and all tradable instruments. So here's the retracement back up into, it's not as clean a void, but let's just call it, that it had this void here because of this momentum move. So if you were quick, you can short this, and you get this little blip down to the downside there. The idea, would have been it could came down here, and it could have, but it didn't. It made a higher low, which is suggestive of, is it possibly starting to make a bottom? Well, it might. It might be because, we do know that this is in some area of support here. Will it hold? Well, the weekly is in a downtrend, so it's certainly questionable. But this is a place where, to get short on the retest, it's just a little bit of a higher high. And then if this big picture downtrend here is going to follow through, and I don't care about these trend lines connecting the dots. I kind of joked about that yesterday with, the coloring book and connecting the dots. And projecting that into the future, and this is what many do. That's what they've been taught to do. But for me, and I've taught many students, it's a ridiculous concept of saying, well, if I connect this dot and I connect this dot and I project it into the future, somehow it's going to mysteriously, point me to some hidden resistance area. This hocus pocus type of analysis that goes on throughout the industry, it's ridiculous. It's why so many get confused trying to connect whether it's the high dots or the closing dots or some other dots, whatever. I tend to get a little passionate about it because I spent many years connecting the dots, 25 years ago, trying to figure out this same stuff that's looked at today. And, the light bulb went on one day and I said, you know what, this is a big joke. Connecting dots and, across, diagonally, or Fibonacci lines connecting dots, and somehow these sideways lines mysteriously make some resistance or support area. Just look to the left. If there's nothing there, that's the void concept. If it makes a swing high, it's created some little area of resistance. Look for it to make a retest of that area, and that's where the seller should be, unless this can continue to move up. But to break the trend, it has to clear major resistance. Or, I'm giving you a lot of lessons here, and we'll be doing a course on this very soon, unless, of course, it breaks down to make a lower low, which then creates a new major resistance area. And then if it was to get above that, you've got a break of trend. All right, let's take a look at the other markets, and we can get going here. S&Ps, right, coming in a little bit, and here's the rollover that's coming in a little bit more. Let's turn this over to a 30-minute. So you can see the retest area. And again, if you are trading intraday, or if you were trading the daily, you could trade a climactic sell here. But as an intraday trader, the way to do that in the most efficient and highest probability manner is to look for an extended climactic type of daily and then drill down to your intraday time frame and look for a retest and failure type of pattern, selling a breakdown, and then you could sell lower highs from that pattern, or you can drill down to a smaller time frame like the 5 minute and short a retest. And this green line here, I can change it to red. It was green yesterday. It was support. But it's not a trader pivot line. It's not a fib line. It is just a line which was support. It's now resistance. So we play it in the other direction. It's that simple. All right. Gold. Pretty big move off of that low in gold. I thought it was going to come a little bit further down, and the retracement here is pretty deep. However, gold has been in this whippy type of range here, and the weekly is just sideways. So questionable as to what it's going to do here. I don't really trade gold at all. I do trade the gold stocks, but I did not get any of this move. It just did not interest me at the time. So I wanted it to come down here. And, one of the lessons of trading is you don't always get what you want as far as, your ideal scenario. So big move off of the low there in gold. And lastly, bonds, bouncing off of that support here. We'll see how far it can get. Another momentum move down. And if you have the mindset to short this would be another scenario to wait for a retest pattern, since this is moving up. So many times what happens to many traders and individuals, and it's currently happened to me, is that you have this crack to the downside, or it's in a downtrend and you're looking to get short in a lower time frame, but the lower time frame is in an uptrend. So the best thing to do, well, two things. You either wait for the double top in the lower time frame, or you wait even longer and you wait for it to break major support within that time frame, and then what was support, you sell resistance. And so really simple concepts when you put them all together with multiple time frames and trends and trend breaks, and all of those concepts coming together is what makes high probability trading opportunities. We'll be bringing more of that to you in the near future. Hope you enjoyed that. Any questions, put your comments down below there, and or email me, Greg@mastertrader.com. Have a great trading day. Have a great weekend.